A sale of real estate is a taxable event. But there's absolutely no reason why that taxable event cannot be mitigated or eliminated by using legal means. It's really the difference between avoidance or evasion. If you're avoiding taxes, you're using every legal opportunity within your means to minimize your tax bill. If you're using tax evasion, you're just looking for an opportunity to share a sale with Bernie Madoff. So we want to avoid, and that's what the 1031 exchange allows you to do by using a very specific part of the tax code. Guess what section it is? You guessed it, 1031. There's two basic sections of the federal tax code that deal with real estate specifically. And there's going to be an interplay between the two of them. So I want to draw back out just a second. Let's first talk about section 121. Now this deals with real estate that you live in as your primary residence. The IRS code says that when you live in a property that has been your primary residence for 2 out of the previous 5 years, then you can sell that property and as a single individual take the first $250,000 in profit tax-free. If you're married, you can extend that to $500,000. So basically, if you buy a house and you're married and you live in it for 2 years out of the 5 years prior to your sale, you can take the first $500,000 in profit tax-free. Not a bad gig, right? But that is for your primary residence. Section 1031 deals with all the real estate that is not your primary residence. So it's investment real estate. And it allows for you to sell reinvestment real estate and purchase investment real estate. And by doing it in a specific manner, you can defer paying tax that normally would be due on the profit. Now, notice the difference between the two. Section 121 is tax-free. Section 1031 is tax deferred. But please hold on to your hats because I'm going to show you some ways at the end that you can get the benefits from both in your real estate investing career. Here's a section straight out of the code that says exactly what the 1031 exchange is. So it's not what the code itself says, but how it's been interpreted over time that's going to define how you can use it in your investing career. But the gist of it is that with the 1031 exchange, when you sell business or investment real estate, you can use the process and defer the payment of tax that would normally be due on that sale. Not a bad deal, right?